Do I need to get closer, you think? 4?
No, I think 3 is good. I would back it out one more. Yeah, that's good.
Oh,
Okay, we are
okay.
live. Prospero.ai stock market live streams. We have a lot to talk about today. The market seems to be turning over a new leaf. I guess George will either confirm or deny that. But just to set him up, the markets ripped last week, George. So what are we seeing in the markets? And just give us a little update.
Yeah, I mean, it's pretty crazy. What we were seeing was, 2 weeks ago, and I commented on this, was thinking that it was very interesting that we saw those like probabilities of the hike, of a rate hike, go down pretty substantially 2 weeks ago. But we didn't really see a bullish reaction to that. And then it's like we saw it happen. They went down even more. And now pretty much the market is forecasting almost no chance of another hike now. They've basically completely ruled that out, especially considering like Powell's comments. It seems like they are more looking at it how I traditionally talk about Powell, which is that he will only do it if he has the leeway to do it. And I think pretty much what we saw with the market the last, when we basically what we talked about 3 consecutive bad months in a row. I think what we basically saw was Powell essentially capitulating in his own way. I think he would never say we're never going to raise rates. And honestly, I think he would never say we're done with hikes. He always wants to leave room to change. He gives himself a lot of wiggle room always. But I think that what he did say was enough for everyone to take it pretty seriously that he was backing off. And the market, that's how you end up with an S&P up almost 6% in a week. I mean, that's crazy, especially considering that the week actually started off a little slower.
So do you expect like this to continue and this run to be real as long as the market is basically forecasting that the Fed is done raising rates no matter what Powell says? Or do you think
I
we're still
mean,
range bound like you've been saying?
I think we're still range bound, and like the behavior today, and I was just checking an update because it's been a little like it seemed a little grounded in terms of like, I'd actually be a little more concerned that we might go down bigger tomorrow. I would want to see the rest of the data today. I don't know how much I may or may not change our portfolio around based on that information. Um, but yeah, I definitely think that the way the market is reacting today makes me a little nervous that we might be going, that it might have just been a big run last week. We'll either see a correction, or maybe last week was the correction. Um, but we got to see. We're gonna watch the QQQ and SPY net option sentiment ratings. Um, I definitely think that uh, I still think my overall macro concern is intact. That we haven't necessarily seen inflation get where we want it to, and even with Powell's words and the market generally not betting on hikes, I still think we will. Betting against the hike, I still think we do need to see those inflation numbers, and if they come in a disappointing way, we could get like I would say both a big turn in the market the other way, as well as those bets of a hike starting to increase again. They're very, very low right now, and that um part of that could mean that we're basically seeing that um we just don't that they think there's going to be more trouble coming in the market basically, and that's why people are just like, well, we don't think we'll actually see this bull run continue to an extent that he might put hikes back on the table again. So that could be, as you're saying, a sign that the market does expect to be rage bound. And one other thing, I was talking about, the VIX kind of being below 20. We basically were saying, I was talking to some of my contacts over the weekend, and essentially what one said, who I really trust on this kind of thing, he said that the VIX tends to spike more if the market is going to move down and it's going to move up, because people are more using it as a volatility hedge on the downside. Um, so I think what we might have seen there is that the upside move last week was unexpected. Um, so I do think that if you look at the converse of that, it also means that people still are kind of like expecting more downside than upside, but not necessarily a lot of downside. Otherwise, we would have seen kind of like that higher VIX, that higher, downside risk, using that metric in particular. But yeah, today's behavior, I would say it could be the story of just like last week was so great. It was hard to imagine there wouldn't be some kind of pullback. But I think tomorrow is going to be the big day where we're going to see, do we turn more back into a solidly positive direction? Does the market decide that like they've gone for this pullback? And you might say you could look at today two ways. You could look at it today and say, oh, this pullback was always going to happen. But there's more support. Like the pullback was going to happen, but it doesn't seem to be accelerating. There doesn't seem to be a lot of downward support. Like it's just a bit of like a mediocre day, a little to the upside. But that's like that's the bull case. The bear case of looking at this data today is saying, wow, it was a huge week last week and that momentum isn't continuing. It could mean tomorrow is another step in, like, we saw the deceleration. Now perhaps it turns the other way tomorrow. Those are the two ways I'm looking at it. And I'm going to be watching our data very closely because right now I don't see enough information where I'm confident in saying which story I believe more.
Does any of the market action from last week, is it is it true excitement from the market, or is it just shorts that were getting burned and had to cover and kind of led to the rising we saw? So, you know what I'm saying? Like, is it true excitement, or is it just like a market dynamic that happened?
Burned is the wrong thing to say because those shorts were doing very well, leading into last week, so you could say it's short covering. Like it certainly could be a lot of those shorts being like, you know what, we're not going to press our luck, we want to cover, we want to take our profits. Like that's one of the theories that especially today could hold some water. But I just really think of it, I do think the shorts are the part of the story. Like I think the shorts are the symptom of, what you might see of the market cure that we saw last week was basically everyone deciding at an increasing rate that Powell wasn't going to raise rates. And I think what ends up happening, and sometimes you see the market leading Powell, and sometimes you see Powell leading the market. And I'll tell you why I phrase it like that. Because basically, like, if the market, as they have basically all decided to bet that there won't be a hike, it really puts more pressure on Powell not to hike. Because if there's a 2% chance that if the market's betting on a 2% chance of a hike the next meeting, and Powell does, which I don't think he would, raise, that's like a really like, I want to say catastrophic. That's a severe bear event. If everybody's betting against it, that could create a really negative momentum in the market very quickly. So that's where it's like a little bit like, yes, Powell leads the market. The market can also lead the Fed. Like, granted, that's only so true. If like rates need to be like, if we're talking about last year and rates just need to go up, that there's just too much inflation, like that's not the case. But now that we're in murky territory, I do think that's the right way to look at it, where it would be hard. Like what I think we would see in the scenario where the market's acting more solid and all of a sudden like a hike is on the table, I think what we would see is we wouldn't see a hike at the next meeting, but we would see Powell come up with some more hawkish, we would see him come up with some more hawkish talk and basically like warn the market to be like, well, you really need to be like modeling more of a hike percentage. Like, and he wouldn't say it like that, but the words he used would be designed to get the market to prep more for a hike. Because the Fed does not like throwing surprises at Wall Street. You throw surprises at Wall Street, and that's when you can get some really negative market events.
Yeah, especially as the market seems to be pricing in like a very good scenario. And one of the companies that we usually talk about in a very positive light kind of has a negative news story today. How severe to be determined, but Epic Games, for people who don't know, who's the creator of the popular video game Fortnite, is suing Google over their App Store fees, saying it's anti-competitive. and I wanted to get your take on, is this an actual threat for Google? Epic already lost the similar lawsuit to Apple, so it seems like they should be able to get by. But in the longer run, are these fees on the App Store that these giants, Google and Apple, are charging? Um, are they threatened to being lower?
Um, that is a very, very interesting question because you take a look at the actual fees and it's crazy. I mean, I don't know. I think it depends, but I think it's something like maybe like 25% at least for Apple. I kind of want to Google that. Like, how much does Apple
I think
charge?
it may be 40.
Yeah, it's crazy. That's why I was like, I know it's at least 25, but it's just like, yeah, 30%. I was closer than you, Steven. But yes, no, I mean, I was just like 25% or more. I was like, it's some crazy number. I knew it was more than that. But that seems absolutely insane. Like, I don't like, to me, that's like what I look at as like an inefficiency in the market. And granted, it's just like the hardware portion is so hard to compete with. But that's where I look at, just like, I look at that as like a structural inefficiency where it's just um like, I think a really good parallel is you look at like the studios and the way that now, like, before content was made where studios funded everything. And now we have all of these independent, independent, like, directors, production houses that they make the thing and then it gets sold. So I do think that there's room, like with fees that high, and I'm not saying that I know the solution because it's very hard, like pretty much everything runs on those softwares. But if you think of like, if you think of the potential, capture of, just a more open source, like, take it down completely differently. Like, if you talk about maybe even separating out like your cell phone service from something that you just like use on apps around Wi-Fi or like whatever, like, imagine if there was just like a nice, like, maybe you just use it around, like, I don't really know. There's more talk of like Wi-Fi becoming more ubiquitous and everything like that. And like, essentially, even cities having that, broadcast. So imagine there's a phone that like you don't need a plan for. There's more ubiquitous Wi-Fi. It's even just like, even they give it away almost for free because the whole plan is they're just, hey, we're just going to start a company that charges like 10%, we're just going to make it really easy, open source, easy to build, easy to get approved, which is something that like some people talk about for some apps. And I don't necessarily think that's a good thing because I do think Apple's good at quality control. Um, but yes, I think that that is something that we can see. I also just realized my internet connections on the Wi-Fi that I don't like. So we're gonna hear your comments for a second, Stephen, and I'm gonna grab my wired connection. I'll be right back.
Okay, no problem. Uh, so for the chat, for the people who are watching, comment if you know who Epic Games were before I brought them up. But the reason I did is because Fortnite is having a second wave because they just released like their new map, or no, old map. They brought it back. So this Epic Games story has come to light as they're, getting popularity on social media channels. And it seems like Google and Apple have kind of taken advantage of their app store, and it seems like the fees are excessive, but there's really no alternative. So these companies are kind of in a bad spot. I know Spotify won't even let you make purchases on the app store. They only let you make like sign up for subscriptions on website. So that's how some companies are getting around it. I think Meta has fought it before with some Facebook things. But they're in a really bad spot as companies because there's no alternative.
Yeah, I run some Twitter ads sometimes, but like I always run them on the computer because it is like, I think it is like 30% cheaper. And Twitter's actually really good about making the pricing like that. Um, but I don't know, like, I think you have to be a pretty powerful company to do that. I imagine like if you had like a web page where you just like sent people out to a different page to subscribe, that would be different. But yeah, it's too much money for someone that's just basically like housing apps. And I just think that there's like, to me, that seems like there's gotta be something. um, that gets improved from that. Like I don't really like I'm not really sure what the solution is. Um, but yeah, I think that when I look at these kind of like market inefficiencies, I can say the following things. One, I don't necessarily see a solution in the horizon, like in the next few years. But also, when I look at it long term, I have to think that either they're going to have to start charging less or there will be another solution that gets developed because it's just too much money for the value that those things are adding. Um, and it also could be just like, we talk about like, Apple sales going down, and they need to like cling to profits for like these kinds of things. And like, yeah, I just think that like even something like the smartphone market, that could be something that it's just like, who even knows if phones are what we use for the next like 10, 20 years when you look on longer time horizons. And it's possible that a part of a new product adoption could just be like, oh, actually, all the apps that you subscribe to are 20% cheaper on whatever this new hardware system is or whatever. Like, that would be a reason that I would consider switching, or I think a lot of people, if everything I bought was just 20% cheaper. Um, but again, like we're talking about new hardware, we're talking about new systems, and like the reason that Apple and any really company like charges like those kind of exorbitant fees, it's often because they can and they know that they can get away with it. So that's the other. These things are obviously like very closely tied together. And if there's a case where they see a threat coming, they might choose to lower their fees. But we talk about this all the time. Both Apple and Google and in those fee structures, they're engaging in pretty monopolistic behavior and they seem to continue to be allowed to do that. And that doesn't make total sense to me.
The thing about this story and like the people that it affects is that it doesn't affect Apple's users. It just affects other businesses that are on the App Store. So maybe that's why you don't see like a big push to have this changed because it doesn't actually affect iPhone users.
Yeah, I mean, I think the other thing is like, and there's a lot of it written about like marketing and psychology around it, and like why things cost like nine 99 instead of like $10. Like, there's like little things like that that are just like crazy psychological tricks. But I think part of it is also that like we don't. It's just embedded in the price. We don't see it. I think when you look at something like Uber Eats and like their fees, that really pisses people off because like it's broken out, and I think they like legally have to show that. But if it was just like if they embedded that in the restaurant, people would be like less pissed about the price. Like obviously they can't obviously like they don't do that and there's reasons that they can't and they can't just like necessarily like mark up the dishes because I don't think they even have permission to do that. But I do think that's part of it too. If you basically saw like your bill broken out, like this is what the app costs and like this is like the take for Apple, like if people had to see that displayed, I think they might have a different attitude towards it.
I agree. I think that's a really good point. I never knew that Uber like had to do that. Now you just brought that to my attention. That's kind of crazy. Why does Uber have to do that when other companies don't? Do you know?
Well, because I think the restaurants like a they they don't want that because they don't want to see that you like look on your menu and then you see on Uber that it's like higher prices because they don't want that because they would think that like people would blame them is the first thing, and two, it's just like Uber doesn't really have the right to change a place's prices. They can change their prices. Uber isn't the place, like so. I think that's probably like part of it. Like part of the terms and conditions are you get to mark the prices and Uber gets to like pick their markup. But also like there's different places that have like delivery fees and all that. Like Uber's negotiating that with those places. Because I think some of them some of them like I don't really know the all of the relationships of these contracts, but I imagine like some places have a delivery fee because um Uber is not making enough off those places. And they're just like adding it because they're saying like, "Oh, the economics of this aren't good enough. We have to add this fee to make it worthwhile." And some of that like I see delivery fees in popular places all the time, and I think some of that is just like volume that they know they're going to have to be moving like so many orders through there. And like if their margins aren't going to be big enough with basically like however they agree to do business with that business, um, they have to charge the fee. And I think that that's like the tough thing about like a lot of these. Like the only thing that I really consistently hear about like Uber as a business, and one of the things that one of the reasons we rail against like places like, obviously this is not always, and I don't know why people get upset when we talk about, or like some people, when I say people get upset, it's like some of the comments. I think those are some of our most well liked videos, but the people that don't like them are just basically like, well, they're not employed, like they're not employees, they shouldn't get money. It's like, well, if they're not employees and they shouldn't get money, why are we passing special legislation to ensure that they like stay declared non-employees? Like, to me, if it's just like a natural thing, you shouldn't have to pass legislation to make sure that someone stays an employee. Like, I don't know what's like, maybe it's like people with um maybe it's people with like Uber, like maybe it's people that like work for Uber or whatever. Who knows why they're saying that. But it's just like, it's very weird that, people, what I like to say, bootlick corporations like that. It's just like, no, like the whole debate sparks because they're working a lot of hours. And traditionally, when you work a lot of hours for an entity, you're an employee. That makes sense. Like, there's this weird rhetoric that we hear back being like, well, they want to work part time. The workers want to work other hours on the thing, and it's just like, okay, whatever, right? Like whatever they want. Like the fact of the matter is, if you're working 40 hours a week for a company and they're taking 40 hours a week worth of profit on top of the hours you serve them, they should give you benefits. It's really that simple. Like, and I don't know why all the bootlicking takes place in those comments.
It's the lobbying working, these people hear the messages that Uber probably wants to send to the public, and then they agree with it without even knowing what's happening.
And it's just like, it's such nonsense that people are just like, well, they're not employees. That's like natural. It's just like, yeah, okay. Like, well, that would make more sense to me if they didn't have to pass specific laws to like keep them to keep them from being employees. That's crazy. But I was going to say the other thing is I pretty much universally hear from the food service industry that Uber Eats just like completely cuts in to their profits. And I actually had an experience recently where I was just like, I don't really know who I'm hurting when I do this, but like I also just like don't, like, it's not my problem. I recently had I ordered food, and like the driver basically like um came and got lost and then was like angry about getting lost. And like this building is like the building that I live in, like it has a specific address, and like there's no other building with that address. And he went to like a building with the same number that was on like a street, like that was on a numbered street instead of the avenue that I live on. And he was all angry about going to the wrong address. And then the food was cold. And I just called them and was like, I'm not paying for this food. And like I was like, it's cold, and I got yelled at. And they refunded me. And like, to me, I don't know who that goes to, the restaurant or like the worker or whatever. And on some level, I kind of hope that it's not the restaurant. I don't really want it to be the worker either. I kind of hope Uber takes the hit for that, but it might be the worker. And like, in general, like, I don't really know how I feel about that. I don't want to take money out of his pocket, but I also don't want to get yelled at and get cold food and have to pay for the food. But that's just a problem with like the model where I like don't even know, like, that was a problem that like got solved because Uber really wanted to solve it, right? And Uber wanted to just like take over these deliveries, and it remains to be seen if that's like a business that can actually like work long term and like be profitable. And that's kind of what we talked about last week. Um, but yeah, I think that the basic problem that we're dealing with there is that we just I don't think that these businesses have great solutions for how to make money and how to also like be good members of the communities that they serve, whether that be the businesses that they deal with or the people. It just seems like in order to profit, there's corners that need to get cut. Where like I think right now the food service industry is the one that is really feeling the pressure. So Uber can really try to like eke out the profits that they need when the question was, did they really set up the business well enough to be profitable in the first place? And I think that answer is no. And I think, ah, yeah, Sienna, really good point. Like, yeah, sometimes they go into these places and then they need certain business models. I don't know which Caribbean country you're talking about, but it really could be any of them, because they do it in a lot of places. They go in and they just expect that the places are just going to roll over and let them kill their cab industry, even if the cab industry is, say, like giving the government more taxes. And Uber's like typical strategy around that is just like steamroll. But like, I think if you're in like a smaller country, it's harder to do that because like in the US, it was like a lot of local governments that had problems. Like the city of Portland, especially, is obviously one that they had to deal with like all of those famous like blackball tactics where they actually like, I don't know, for people that don't know this, they actually created a special like software system for people that they knew worked for the city of Portland where they would call cars and they would never come because those people in Portland were giving them taxes. And that is, I mean, we're giving them tickets. And that is very, very illegal to basically serve. Apple actually caught them and they got in trouble with Apple, which kind of brings us full circle about yes, that's actually the kind of value that Apple is providing because they actually had the tech know how to figure out that's what Uber was doing. So to come full circle, maybe that is, what we're paying for on that 30% markup. And I've accidentally argued the counter case in this Uber example. But yeah, I think that's like, I think it's a big problem. And that's a great point, Sienna, where it's just like, yeah, they go into these places and they just assume that they're going to be able to just like act however they want and not even observe the laws and like, and the citizens of that country owe them profit. Like that's the way Uber behaves. And I just hate to see when companies act like that. And I'd like to see when governments actually stand up and say like, no, we don't, you're not giving us enough that you get to stay here and you get to operate your business.
It's so funny how we got so deep on Uber because they're one of the companies that I was going to bring up. They're reporting this week. But before we get into those companies, maybe we want to answer Kyle's question. He's asking, how does the pricing work with software companies? What is their general overhead? Is it mostly AWS data prices?
Those are two different things. Data can be a large expense. Like data, as we go on, obviously, like Prospero plans to work with retail investors to ask for data and deliver it into predictions for our users. That's like more of a long term thing. But data is like, for a lot of Wall Street companies, other than talent, data is right after that. So the data costs, they're not necessarily as significant for other places. But depending on the business, data can be expensive. But cloud costs are very like, there's a reason these cloud businesses are coming more and more because nobody's really buying their own servers anymore. Um, and actually, the price of cloud, there's a pretty decent markup relative to just buying your own software and buying your own hardware and just like housing it in, say, like a server rack system. But the reason that people pay those costs, they pay that additional thing, and a lot of people's cloud budgets, it depends on the company, but if you're a really big, especially like tech focused, heavy on automation, your cloud costs could be 20% of your budget. Granted, you like talking about those terms, heavy on automation. Um, but yeah, I think that that gets more and more. But like if you think about the cloud, the real benefit of the cloud, um, one of the things is like if you're just having to buy like a server farm of your own, not only are you also paying like the cost of that real estate, like which can be immense, especially if you're putting it in your office building that has a high cost per square foot. And now like some of these places are like, building like underwater server farms. So they like, or in cold places. So they don't have to basically like pay to air condition like the server farms or like whatever. People are getting creative to like keep those costs down. And obviously there's economies of scale there. But the other thing, and I would say the even bigger reason that I wouldn't say build my own server farm is what you're really paying for in cloud is like the guaranteed non-failure guaranteed backup data, because when you have, even if you provision certain resources, like Amazon is making sure all your code, or what, all any of these cloud places, they're making sure all your code is duplicating. They're making sure if like one of their server farms is down for whatever reason, they get you spun up on another one because they basically have backup copies of all your code, everything that you run. And that's really like why I use AWS. Because like let's say my company's in New York, right? And I have like all of our servers in New York and there's just like a power outage in New York. Okay, my product doesn't run. Let's say I even have a redundant one in Los Angeles, right? That's pretty good. But then I'm paying for two massive server farms that basically needs to just like run all of my payload. And the other problem is like, let's say sometimes like the payload that I need to use on these server farms, some days it's higher, some days it's lower. The other part of that is like, I basically need to have enough payload that I can run everything at my highest time. So all of a sudden, you need to have enough resources that can run your highest, like just the example we gave, your highest usage, and then it's basically, it's going to be running dormant in any time that isn't your highest usage. And your low usage, you're basically going to be paying to run the power on everything just in case at the drop of a hat it becomes your high usage time. And you're talking about a fully redundant facility in another place that you might not be taxing the resources, but you have to keep it on and keep everything backed up there in case anything needs to happen. And like the nice thing about like what's called these elastic systems that Amazon has, and one of the reasons we pay for the Amazon, Google, whatever, pay for it is like you can now pay to use only whatever you're using. So you only pay for the max times on the max times, and on the min times, you're only paying for that. And that's the real reason that we end up paying a huge markup. Um, as well as like a third one that is, very important, which is that like you really have to worry about cybersecurity a lot less when you're with these cloud providers, because what you're paying for, there's a lot of embedded cybersecurity when you're spinning up on any of these cloud platforms. And that can get really, really expensive if you have your own servers. So, like, it can be really expensive. Like I'm saying, as much as 20-25% of a company's budget, if you're running heavy automation, could be in the cloud. I would say for like older school businesses, you might have as little as 5%. It's I don't really analyze the older school businesses as much. Like it's hard for me to tell like something like Berkshire Hathaway, that's just like a massive enterprise, like how much cloud would do, and like a lot of they have tons of different businesses, and it's hard for me to even like run those calcs in my head. Um, but yeah, like cloud can be a pretty significant expense, because everything runs on computers now. And the other thing that like I think it's something like, I don't know the updated figure, but even like a year ago, I think it said that like 90% of the world's data has been um has been created in the last couple years. And I think that just keeps on accelerating. So some of that like cloud is just like you're actually paying to just store all this data. And there's something called cold storage, which is basically like it's slower to run compute on. And sometimes you move something out of cold storage before you run database operations. And it's cheaper to do it in that, because like you can put you can put on a different server on a different hard drive, a slower hard drive. You can put stuff that you just don't need to process on. There's You could really go down the rabbit hole on this, but um the most um yeah, the most that you're gonna pay, like most of it's storage hardware. It's all of those things. It's like buying the hardware and you just paying for like prepaid hardware that they have. Like electricity, I would say, is like less of a cost. And some of it is just that like they can charge you that. Those are the market rates. And like if you look at it, like, you know, I'll give you an example of like, and it's come a long way. Like the last time I bought computers for myself was about, I think it was about 5 years ago. And the numbers, we were running on some pretty advanced GPUs. And basically the numbers were I could buy one of these desktops for $2,500. Um, and it would cost about like, let's just say $30 a month to run the power on just one of those machines, right? AWS was charging me about $1,500 a month for that computer. back in the day. Now it's closer to about 800 a month for like a similarly provisioned GPU and like a similar price. You might like about $2,500. So yeah, you're basically talking about like it's the hardware that they spend the money on, and it's like about that same, maybe a little cheaper for them because they buy in bulk. So like basically like yeah, they could easily get a computer for like, let's call it that. Let's say it's about $1,500 for the computer and probably to run it even less on power because they have scale on that, maybe like about $10 a month. Um, and they'll charge $800 a month for that. But if you think about the large numbers of that, like let's say if you're buying like hundreds of those machines and you're a large corporation, the logistics of you buying and housing those computers, and then also like I'm saying, the security that you need, the fail safes if they break, like all of those things, you're basically like paying that markup for that, but like the actual cost of those computers is it like you're getting a huge markup on that, but like the markup comes from like the fact, like the logistics that you have to deal with around that.
I just want to thank the chat for the questions. I know we love getting some engagement, so thank you, Kyle and Sienna. And probably the only color I could add to this topic that we're on right now is that I remember seeing a clip of Mark Zuckerberg talking when he was really young, talking about how they ran Facebook for $75 a month for the first few months of the company. And I think they just did it on like a laptop or a few laptops, which is crazy to think about how far they've come from when they started. Um, but if we just want to move on, or you want to say something?
Well, I think we're going to talk about Uber. Like we're going to talk about Uber's earnings a little more, right? And I think yeah, like one of the things that we are seeing from Uber is we are starting to see them run like not only run some profits, um, but they've beaten the last 3 quarters. They've beaten estimates. Um, last quarter was actually a big surprise that they did, and their revenues keep going up. I mean, look, they they definitely are a huge business and growing, and they have like a very aggressive growth style. Um, but I just think that like yeah, my biggest problem with that is an investment. It's decent. I like a lot of investments better than Uber, but like part of it is like, and people probably hear me talk about this thing a lot. I think it's important to like vote with your dollars in capitalism, and I just don't want to vote with like personally. I don't want to own a stock that I think just like is creating a bad situation for the especially the food service providers, is having people work like upwards of 40 hours a week for them and not getting benefits. I just don't want to support um I don't want to support businesses that behave in those ways by buying their stock.
Yeah, so we also have a few other companies that are reporting this week. We're nearing the end of earnings season, but besides Uber, there's also Disney, Warner Brothers, and MGM Resorts. And do you have any feelings about any of those companies?
Well, I mean, I think we've railed against Disney enough recently. We don't need a special commitment to them. But we've been shorting MGM. I'll take a fresh look on like actually I need to like update my model portfolio today. Um and we'll take a look at what's going on with them right now. Um but they have not looked good. Um
While
yeah,
you're
they
looking
still
for MGM statistics, we got a question from Jonathan about a Celsius 3-to-1 stock split.
mean Celsius is one of our favorite stocks, and a split is really good for them. Like those like reverse splits um tend to be like something companies do when they're doing really badly. Like Celsius is expecting demand. They're expecting like they're a pretty popular stock. I do expect their sales to keep growing, and I think it's going to be really helpful when they do the split. I mean, there's just something very interesting, and I've seen it with AMC like many times where it's just like as the stock just like regardless of how well the business is doing or momentum, when it gets to a certain price, people just like tell themselves like, oh, at this price people are going to buy even if the value is relatively the same. a lot of retail investors don't understand value very well. Like it actually amazed me in relation to AMC how many people were just like, how could Cinemark be trading at a higher price than AMC? Blah blah. Well, it's just like, well, actually, like if you look at the relation of EV, enterprise value, which is market cap minus debt, if you look at EV to sales, which for a company that's losing money is a very essential thing to look at. Basically, you're looking at like the market cap minus the debt and the relationship of that to sales. Like AMC was actually trading, even though the price was lower, like Cinemark was trading way cheaper than AMC. So you had all these people just being like, why is Cinemark trading, quote unquote, higher when actually, according to like the value that the company was generating, Cinemark was at a huge discount. And I think some people just don't even understand those fundamentals. So, like, because so many people don't understand those fundamentals, when they see a split, there is just like, I would expect Celsius to do well because, like, everybody's like, oh, Celsius is cheaper. Like, we'll be able to buy it now. Even though, like, you're owning the same relative part of the company, like, those kind of splits just work really well. So yeah, that might be a good trade leading into that event. I would expect Celsius to go up the day that it does that split and probably leading up into it. All things equal, if the market is, if we're looking at a bear situation, I would still bet on that more than I would a lot of other stocks. But I'm not going to say that Celsius is going to go up in a bear market just because it splits. I want to be clear about that. I will say I would likely prefer that to many other stocks as a buy going into that split. I think that is a fair comment. Assuming it's still as great as it is right now in the Prospero signals, which it has been.
And before we got a little bit sidetracked by Jonathan, thank you for your question, by the way. We were going to talk about MGM, and did you see anything within Prospero and the signals for it?
MGM looks bad. We've been shorting it. We're gonna probably keep shorting it. That's the story on MGM. I almost dropped it. I'm glad I almost went like way too bullish in my I started to add a lot more bull picks, but I almost went perhaps way too bullish at the end of last week because I was getting my butt handed to me a little bit. But sometimes you have to like keep your I did exit Dish, which I am just like kicking myself over because it is down huge today. But you know, I always emphasize process and yeah, I definitely practice what I preach.
Yeah, that's funny. I just posted on all our socials about your process it'll take from last stream. You guys can watch that on our TikTok, YouTube Shorts, and Instagram. But yeah, you said you're going to leave money on the table sometimes as long as you have a good process, right?
I left money on the table. You can't like you just gotta like you gotta be willing to. Like it's hard. It's hard and like I'm just like, oh, what did I like? I want to say what did I miss? Right? But net option sentiment was going up. I followed my protocols. It went up above 50. I didn't like that. Like the one thing that I could beat myself up a lot about it is I was holding on to a lot of shorts. But I held on to a lot of shorts that were below 50 net option sentiment. So yes, like you're always, and I think that's like a healthy, like it's a healthy thought to have like, oh George, like you might like you could have made more money is the right way to think of that. I could have made more money, but I didn't do anything wrong. And I think that's a very important distinction for people to make. Like the difference between like, yeah, I could have made more money and it's paper trading, obviously, if we discuss, it's like, yes, I could have made more money. Did I do the wrong thing? No. And a lot of people think about that wrong. They'll say I did the wrong thing because I could have made more money. But it's just like, no, those are two separate things. There's making money, which a lot of the time can be a function of luck, and there's having a process. And I have a process that works. I think a lot of people see that, right? And if I apply that process and I leave money on the table, that's okay. And like, I think it's also like really important to have a healthy relationship with yourself around that. Like I could even be like, man, I left money on the table. But like there's a difference between that and like like playing around with myself a little bit and like having a good attitude. There's a difference between that and like actually being upset with yourself about like applying your process. And if you could have a more jovial reaction to things like that, that's fine. Because like no matter how good of a trader you are, no matter how enlightened of a being that you are, like you leave money on the table, you make a choice that ends up like getting a result that you would have not preferred. You would have preferred a different result. Like you cannot stop yourself from having feelings about that. I have feelings about it, but like what you can stop yourself from doing is like blaming yourself because you have feelings about it. And I think that's the difference between like being process and outcome oriented.
Yeah, you got to trust the process. And someone who's had a process that's worked for, decades and decades is Warren Buffett, and his company Berkshire just reported they have 157 billion dollars in cash in reserves. I mean, it's just a staggering number to like think about. Um, how do you feel about Warren Buffett today being over 90 years old and still like running this company and I don't know, all that cash?
You know what I think is my favorite story about Buffett, and I think this shows that sometimes like the ultimate lesson to learn is like some people don't listen to the mob and they're just right, and the mob is still going to be upset. Like Warren Buffett for so many years was criticized for not giving money away to charity, like, or not giving enough money away for charity. And now he has this massive foundation. And to the people that listened, not enough people listened. A lot of people were just like, oh, he's selfish. He's a selfish capitalist. He just loses money. But what he always said was he was just like, actually, I'd like to give more money away to charity. And like, I know I can invest this money and get a much better return than the charities. And he also talks about the flaw in charities. Like, if anybody looks, there's sometimes like charities that actually like spend like 70% of their money on like salaries and fundraisers and not like the actual charity. That's a separate question. You can find charities that give most of their money away. But Buffett's point was actually like, hey, I make an insane return on this money. Why am I going to give it to a charity when I can actually hold it, make that insane return, and give more away later? And I actually like respect the hell out of him for that because he does have a lot more money to give away to charity. He is giving it all away. And all of these people talked about him like he was a bad person as he continued to crush it in the market and eat his like McDonald's sandwiches and like keep squirreling away more and more and more money. So like I respect the hell out of him for that because he is giving away a mountain of money to charity. And that's just like, yeah, I really, really respect him for that because he did not care what the mob said. He did not care what people said. He did not care that people thought he was selfish. He knew what he was doing was right, and he did not give a shit about what people said about him. And ultimately, he has more money to give away to charity. And I wish the world was more like that, where more people did that kind of thing.
Do you think we could see the company Berkshire like implement that money in the next year and make a crazy acquisition that nobody would expect?
Right? He's always looking. He's always, but like, I think it's more likely that he deploys that, like, that he deploys that into assets. Berkshire invests, obviously. I think it's much more likely. I think it's much more likely that that money just gets deployed in equities when he's more certain of the bottom. He just holds cash. He holds cash. Like he doesn't like to short. And like, by the way, like it's kind of one of the things that we talk about. I think that's again him being like a good person, right? Because like if Warren Buffett made a massive short bet on a company and everybody knew he was shorting it, that company would be dead. you know, he would be the goddamn executioner. And he doesn't want to be the executioner. He'd rather put his money in cash and like, no, I actually like he has his faults. And he's a very gruff guy. Like I actually know some people that know him. My first boss, I would get like knows Buffett. I mean, my first boss was a pretty famous value investor. Um, and I would get tidbits here and there about him. He definitely is like a no nonsense, like very just like he says what he means kind of thing. He's not buttering anyone up. He's very like he can be very soft spoken at times. Like most of the time we see him when he's not being soft spoken. Um, but he certainly is not someone that just is like talking. He's not like me. But 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 obviously he's not afraid to talk either. Um and yeah, I think that the main thing there is like I think that is also another way where he's a good person because like it just wouldn't work, you know? He couldn't like and he knows that. He can't be shorting stocks. If people knew he was shorting them, it would just be like it would just be like a people would be fighting over themselves to get involved with that trade of the company he didn't like, and he'd just be like, he'd be killing companies left and right.
Maybe we'll see Berkshire Hathaway give the U.S. government a loan soon. The way things are headed.
There's always talk, like in any like bailout, there's always talk of him like buying a bank or like whatever. Like I do think he loaned. You can correct me if I'm wrong. I do think he loaned money to one of the banks at one point at some very attractive terms for him. Like he got better terms than the U.S. government, if I recall. I don't know if the deal was closed or if it was just a proposed deal. Um, But yeah, I mean, hey, if he had more of the energy for it, I think Buffett would probably make a great president. Like both in that he wouldn't be in like he wouldn't engage in any of like the stupid games or the infighting or whatever. He would just like make our country run a lot more efficiently. I'd vote for him. It would be great. I would love to see Buffett's run because I feel like he would just basically not really talk very much, have very like simple slogans. His political poster would just be something like I'm going to clean up this mess, and it would be him probably like with a very like neutral look on his face and maybe like his arms crossed and like it would be a great political campaign. I'd love to see it.
The dullest political campaign of all time. We have another question from Kyle. He's saying, "Is credit forgiveness a realistic possibility?"
I don't know. Like it's one of those things that the US government loves. It's like I was actually on a really cool I don't know, I don't remember if I told you this. Um Stephen, but I was actually on a really cool panel this past weekend. I spoke at a Princeton event where like the guy to the right of me. Oh, and we're probably gonna share it on our YouTube channel soon. They said they would give me the video footage, more interesting shorts. But the guy to the right of me was the ex CTO of the United States. And one of the things that I actually pressed him on was he was talking about how like Huawei phones were basically spy tools and cheaper, and how like how the U.S. government was basically like, to other governments like, well, like we don't buy them, blah blah. And like um I asked him like, well, like why does the US government like say subsidize oil, but they wouldn't like subsidize other phones, so they spy less? And he basically was like, there was no comparable hardware to like some of the things the Huawei phones did in terms of 5G. I think they were the earliest to have like the 5G capabilities, and that was basically the issue, that we didn't have the right hardware to deal with 5G. And we were basically telling like these Nordic countries, we are like, don't buy Huawei phones. And they were like, well, like, what else do we buy? But that was like kind of the interesting point about it, where it just like I forgot the question. I rambled off of the question. What was the question?
Is credit forgiveness a realistic possibility?
Oh yeah, it's sitting right there in front of me. Jesus. No, I don't. I think we might do some of it, but like, that's not anything that is like, yeah. As I've said many times, socialism for the rich and socialism for corporations, like lower taxes, tax evasion, blah blah. All of that is like, subsidizing oil. All of that is socialism that is sanctioned. But socialism for the poor is unsanctioned because I don't know if anybody knows the book. Like, if you give a mouse a cookie, like basically, like the concept is like the mouse is just going to want more and more stuff. And I really think that like that's how the U.S. government thinks about its people. Like, if you give a mouse a cookie, like if we give them loan forgiveness, then they're going to want to be like just like treated fairly and stuff. And like we don't have the money to treat them fairly. Like I think that's how they like look at everything. It's like, oh, we don't want to open up the piggy bank to be good to people because then they're going to expect us to be good to them, and we just rather not.
Yep, it's a sad state of affairs, and it's also a sad state of affairs for the company formerly known as Twitter, X. They've had a lot of news come out about how their market cap, I think they were giving some shares to like I guess company insiders and family and friends and stuff like that since they're private, but they're valued at 19 billion today and they were acquired by Elon Musk for 44 billion. But they also had a pretty cool news story where XAI, which I guess is a branch of X now, released a chatbot called Grok that some visuals came out, and it's supposed to be like a snarkier, kind of humorous chatbot that will give you answers to some things that ChatGPT won't. So, what do you think about X? Like, do you think they'll ever go public again? And do you think their future is bright?
Um, it's really, really like that's one of the harder ones to figure out for me. Um, and I'll tell you why. Like, I honestly think that like some of the stuff that they do and like everything's just become so polarized and like I feel like everybody has like a very like either you're with me or against me kind of attitude. And like all the stuff that's going on with like advertisers, like I do not like what X is doing with hate, like like there's definitely an increase in hate speech, all of that, like that is just like really something that you want that you don't want to see, and you don't want to see like a laissez-faire attitude like create that. On the other hand, I do see the point that I don't really want large tech companies determining that like some speech is okay and not other speech. Like I think both of those things are true and there's like a lot of nuance to it. Um, so like in the sense that I think that like, you know, X is a risk because the way they approach some of these things is very like one side of the aisle. But on the other hand, like the other thing that I'm saying is like I don't think you're allowed to have like a slight different side of the aisle now. It's like you got to be on one, like everybody's just like if you do one thing that isn't like very clearly on like the side that you're supposed to be on and like both sides think that like the side that they're on is the side that everybody's supposed to be on, like um there was recently something where like someone that I know got doxxed because she's a reporter and like and like the funny thing is she works for the Post and she was reporting on like an immigrant rally and basically like I think it was called like an anti-immigrant rally and they didn't like to be called that. They were like this is about freedom and protecting our children from rapists. It's like not about like anti-immigrants. Like those people aren't getting checked and they're going to rape our children. And like that's what they said. And they were actually mad at the New York Post, a pretty conservative publication, for not basically like declaring them, like not anti-immigrant, but like anti-rapist, like is what they preferred to identify as. Um, and they actually like doxed her and got mad and like yeah. So it's like that stuff is like it's like oh my like it's so extreme now that even if like you're a right wing publication that like generally like stays like right of the aisle, there's even people that you're just like not right enough for them, and that happens on both sides. There's left people where the people further left are not like left enough for them, and it's just like but the long and the short is like it is a concern. I think that I think that Twitter is like I think or X has like moved themselves to a place where they're viewed as more of a biased source than you ever want to be. Or like more viewed as like aligned with one political party than you ever want to be. Um, like I personally would rather not be aligned with any political party, um, either of them. Sorry if that offends you. I think they both do a lot of wrong things, and and I think that if we're all going to get along, if we're going to solve something like a large problem like fixing the stock market, we have to figure out what unifies us. And I think we're all unified by the idea that we want the stock market to be more fair. And I think that's the kind of thing that like I like to focus on, like the ties between us all, not the things that we disagree on. And so I do think companies have um actually it's kind of funny. I don't know if it's like subconscious branding by this guy who I was on the panel on that I think he served in the Trump administration. He's been calling existential risk X risk, basically how like robots might take over or like whatever. He kept on calling it X risk, and I think it's kind of funny. Like X has X risk because of like how it's aligned politically, and I think that it's still like or how it's aligned, how it's viewed. Um, the flip side is I still think like in terms of like the stock, like the fintech community, you get better information there. I have a good friend that's like, I only get my basketball news there. There's no other good place to get basketball. I'm like, I didn't know that, but like, there's a lot of people that feel that way about fill in the blank kind of news that they like get it on X. So I do think they have a solid differentiated product there. Um, but uh yeah, I think that I think that we might be out of time. And I have something on the tech side that I have to finish.
Okay, so
So
we'll wrap it up
we're
quick
gonna jump.
today.
We're not even waiting for questions. We did our hour. I've given you everything that I've owed you, audience. And now I have to do this is my fun job. And just so everybody knows, I really like doing this. Thanks everybody that comes. I really do like doing these things. But this is one of my many jobs. I have a data science thing to solve now. Um, Thank you for coming. And I'll see you guys later.
Yeah, thanks, George. Thanks, everybody. See you Wednesday back here.